Good afternoon. This is Stacy Hyde with Envision Financial Planning, part of the Calmwater Financial Network. And I wanted to put this video together for you so that y'all would have some information as we go through these incredibly crazy times. And I hope everyone is staying safe and keeping your distance as much as you can, washing your hands a lot. And I just wanted to give you a couple of tips and tricks and things to think about to protect your financial security during this crisis. I know, or I hope, that you're not on guaranteed minimum pay right now, but that should be pretty close to what we've always encouraged y'all to be able to live on, which is a 36-hour check at a pretty low bonus. And if you can pay your bills on that, then you should be pretty good on this guaranteed minimum pay. No, you probably won't be saving as much for vacations and that type of thing, but you should be okay and you should be able to pay your bills. If that's not the case, you need to take a real tough look at where your money is going out. If you're like us, you're not going out to eat now. There's a lot less discretionary spending now that we're home. We're not tempted to go shopping and have some impulse purchases. So hopefully that is helping you save some additional money. But also you might need to take a look at where you are spending your money and really try to cut back. Look at your cell phone bill, look at your cable bill, look at your car insurance. Are you paying for things that you shouldn't, or do you have things that maybe your adult children can now be responsible for? Whatever it is, just try to tighten your belt a little bit. The other thing is, if your spouse has been laid off, definitely want to apply for unemployment, even if they were like a hairdresser or something like that that traditionally didn't qualify for unemployment. They will under the new CARES Act that was recently passed. So definitely would encourage them to do that. Also, if they work for a small business, there's some additional protection for them if they have to stay home and take care of kids, because I know that being on shift makes it really hard to do childcare, and a lot of daycares, and I know schools are definitely closed. So that's another thing to look at there. And the other thing that we've talked a lot about is what we call the paycheck allocation. And what we see oftentimes is y'all have $100 or $150 or $200 a week going to a savings account, and everything else goes into checking. That is the opposite of what you need to do, especially right now. You need to sit down and figure out what it takes to cash flow your life. Like I said, I really hope you're already, and you can do it on a 36-hour check. But look at that. See what that amount is. That is the amount that should go to checking. And, that's food, that's clothing, that's discretionary income, because we will get out of quarantine at some point and be able to go out and hang out with our friends again. But for right now, it is whatever that amount of money is. And then everything else goes into savings. Because when you do that, when production picks back up and bonuses go back up, all that extra money is going to get moved over to savings. And that is going to help you build wealth so very quickly. I've had teammates do this and they come back to me and they're like, Stacy, I took you at your word. I did that. I transferred that money and I have $10,000 in that account that you had me set up. And I don't know what I was spending that money on because I took you at your word. I put plenty of money for golf or hunting or whatever in that account. And so that is the key. You want to set that money aside and it goes over there, because what happens to people is when things get busy and the plant's running and bonuses are high, you're tired because you guys work a lot. I guess you already knew that. And so what happens is we want to reward ourselves, and our ability to deny ourselves goes way down. But if we've got that money in a savings account, preferably at a separate bank, and it's not linked online to your checking account, then you have to kind of think about it. And maybe you still do it, but hopefully you think about it and then you decide to do the stuff that you really want to do, which may be a vacation, down payment for a house, funds kids' college, purchase the new truck. The key thing is, you've heard us say over and over again that you need to have an emergency fund. 3 to 6 months of pay set aside, not in Nucor stock, but in cash at a bank. Or I know a lot of y'all have a lot of money in a safe or under a mattress, whatever, but just good old-fashioned cash. The reason for that is it's there if you need it. You don't have to worry what it's worth. So that I want to encourage you to do. We do not recommend purchasing Nucor stock in your 401k. Your income, your profit sharing plan, your health insurance, they are all based on how well Nucor does. And so therefore you don't need to double down and purchase Nucor stock in the 401k. We are big fans of Nucor stock, big fans of that. But we believe if you're going to own it, you should purchase it via the stock plan outside your 401k. Don't put all your eggs in one basket. Stay diversified. The other thing I want to talk about are recovery rebates. So who is eligible? If it's based on your income in either 2018 or 2019, depending on which is the most recent tax return you have filed. So if you filed in 2018 and you're married and your income was below 150, but you made more than that last year, don't file yet, because you've got till July 15th to file, and it's based off of your most recent tax return. So that's the key, because even if you file 2019 after you've gotten your recovery rebate, you don't have to pay it back. The reverse is also true. If maybe 2018 you made above $150,000, but in 2019 you didn't, you'll want to go ahead and file so that you can get that recovery rebate. If you made over $150,000, it phases out. Basically $5 for every $100 of income. If you've got kids under 17, you'll also get $500 for each of them. Kids in college, you will not get that. If you do not claim them as your dependents, they can get the recovery rebate on their own, but they have to qualify to stand on their own. The same thing, like you may have some parents that are on Social Security and not paying any income taxes. They will still also get the recovery rebate. Then the other is on your 401k. We've gotten a lot of calls about what do I need to do to my 401k. Well, the market went down a whole lot. It's come back up a nice amount, but we're still down about 15% from where we started the year, which is scary. And I get that. The key to recovering from that is to keep putting money into your 401k. Not to sell all out of the market right now, because that's what people have generally called and asked us, don't you think I should sell everything right now? Well, if you sell, particularly if you'd sold before last week, you would have locked in those losses, and you would have had to have bigger gains in the magnitude of 35-40% to get back to even. Now with the rally that we had last week, it won't take quite as much. And that's important to know. The key thing is, if you continue to buy right now, you're buying more shares so that when the markets recover, your value will go up more quickly. And so that's what we encourage people to do. It's the whole buy low, sell high type of thing. It's also the reason that we encourage you to periodically rebalance your 401k, which is sell what's gone up and buy what's beaten down. You know, stocks have gone down and your fixed income has held up. And we define your fixed income as the MIP fund, money market, PIMCO total return, total bond market index. That's fixed income. Life path retirement index. You want to go back to those target allocations. You can find the latest ones on calmwaterfinancialnetwork.com. And one thing you may want to consider is, if you're in the balance model, to switch your future contributions to growth so that you're buying a little bit more stock right now while it's on sale. I wouldn't sell your existing assets to that, but your future contributions might make some sense. And if you have any questions, any specific things that you want to talk with us about, I'd encourage you to give us a call or email us at info@envision, ENVISION, we'd be happy to try to answer your questions, maybe get on a video call with you to see if we need to look at your 401k. Thanks again, and we look forward to seeing you in person at the plant very soon.